Hey, what's going on, guys? Leo. If you find the content valuable, please hit the like and subscribe button. I really do appreciate it. So let's go ahead and dive in here. Let's take a look. So 21 shares yesterday, they proposed adding staking to their Ethereum ETFs. Now, this is a really, really big deal because one of the problems that the Ethereum ETFs have been kind of having is a narrative, trying to pitch it to institutional investors. And we are starting to see the steam that get the ball rolling, so to speak, as more and more people start to buy in. And that's because like gold, Bitcoin, for example, it has kind of the digital gold narrative. It's very easy to roll off the tongue whenever you're trying to pitch this to clients. But now you can go to clients and you can say, or BlackRock and these financial asset managers can go to their clients and say, hey, look, I've got this crypto. It's a blockchain play, and it has tech stock like growth, but it's also paying a 3% yield now because we've added staking to the ETF. Now, if we take a look here we're on farside.co.uk/ETH, and this is just a website that I use to keep track of the Bitcoin and ETF flows. But if we come down to, or actually, let's go to the top first. So at the top here, we have BlackRock, Fidelity, Bitwise, and then we have 21 shares. These are the guys that just filed for their staking approval. And if we come all the way down here, this is going to be in the millions. So they've only got 17 million worth of Ethereum in their ETF. And we did see, as soon as this news broke, that the price of Ethereum had spiked. It spiked up. It was 3.5% as this news had broken. So the big deal here, in my opinion, is that BlackRock and Fidelity haven't filed for this yet. And that's a really big deal because if you come down here, you can see like BlackRock, for example, they're holding 4.4 billion, and then Fidelity's holding 1.5 billion worth of Ethereum. And so 21 shares is essentially forcing their hand to file for this amendment to allow staking in their ETFs. Because let's say that BlackRock and Fidelity don't, well then the 21 shares ETF becomes much more appealing to institutional investors because now they have yield on this high growth tech stock type of cryptocurrency. So I think that we can expect within the next few days that we'll see filings come out from the other ETFs because they want to stay competitive and they don't want to fall behind. So I can't imagine it going more than a week and we don't see some sort of news or filing about this. And what's interesting is that the price of Ethereum spiked about 3.5% on this news, but this is a really small one of these ETFs. Imagine whenever that news breaks, that could cause a really big spike, 5-10%. And then what that could do is that could trigger, in our previous video that we talked about with the potential short squeeze, because right now Ethereum it's in at an all-time high for short positions. And so if we get this news that BlackRock and Fidelity are also going to start allowing staking, we could see a massive spike, and it could just trigger a cascade of market orders and just force the price higher. And being that it's sitting at support right now with a huge ETH short position, I mean, it's ending up looking like a perfect storm. Also, Ethereum did spike on news that the whole Russia-Ukraine war is likely coming to an end with negotiations beginning, and I believe they're starting. They're going to have a meeting tomorrow on Friday. And so if we come out of that meeting saying, "Hey guys, it looks like we have a resolution to this," the markets are going to have a huge sigh of relief. We're going to see a rally because that's going to signal stability, global stability and peace, and markets like that. They don't like uncertainty. So now if we come over here, we can look at this article that's kind of talking about this. There's a couple things that kind of caught my attention. I guess in the filing, they said that they want to, from time to time, start staking through trusted staking providers. A lot of this has to do with, because if you have an ETF and they have to buy spot, whenever you do staking, because I stake my Ethereum, you can't withdraw it immediately. So I imagine there's a couple of options they could do. They could go through one of the liquid staking tokens, which will provide less yield, but it'll allow them more flexibility for getting in and out as trades take place, or they could make a deal with like Coinbase or something. So I think that's not really too much of an issue. The other thing that I thought was a little bit strange in the filing, it says that it also stated that it will not advertise itself as offering staking services or promise any specific returns. So I'm not really sure what that's going to end up looking like. I guess it'll be just kind of like a bonus. Oh, well, we made, because of the uncertainty, this is what we made in interest. Here you go, type of thing. We'll just kind of see how this thing unfolds. The sheer profitability of stablecoins. So let's take a look here at JPMorgan Chase. So it looks like JPMorgan for 2024, the same period as Tether, their profits rose 18% to $58.5 billion. Now, so over here, so JPMorgan Chase, they've got about $2 trillion worth of deposits, and that's really interesting to me because we come back over here. So Tether has about 141 billion. That's essentially how much they have deposited with their stable coins. That's where they get their market cap from. And so they have a in 2024, they had a $13 billion profit. So that's about a 10.8% return on the stable coins that they have. And they're getting that a lot from the buying U.S. government bonds and different things that they invest in to back up the stable coins value. Now, if we compare that over here with the $2 trillion that JP Morgan has in deposits, and then we look at the revenue that they currently have. So they currently in 2024 made 60 billion roughly. So the 2 trillion, if you can get, assuming they can get the same return of 10.8% on that 2 trillion worth of deposits, if they converted the 2 trillion into stable coins and then invested the capital to back up the value of the stable coins, that's 216 billion worth of additional profit for JPMorgan Chase. This is why I say that stablecoins are such a big deal and the Trojan horse for massive adoption of crypto. Now, I mean, let's say that JPMorgan, let's say they don't get the 10%. Let's say they get 5% or even like a quarter of it. So now that's an additional 50 billion worth of profit that they're making on their company. So they basically doubled their entire company's profit just by creating a stable coin. That's how profitable these stable coins are, and why we saw in the interview with David Sachs, where he said that stable coins could drive trillions in demand for treasuries. This is it, guys. And I know the other side of this argument is that, because I've got a lot of comments saying, no, I'm wrong. You're wrong, Leo. They're going to use XRP. Okay, just take a pause for a second. Do you think, I don't see a world where banks are going to allow a third party like XRP to simply take up all that profit? If I'm JP Morgan Chase, I have the option of A, building my own stablecoin and making an extra $50 to $200 billion a year in profit, or B, I use XRP and they get all that profit. If I'm JP Morgan Chase, I'm making my own stablecoin. There's no way around it. And I know that you can, from my understanding, build stablecoins on the XRP ledger, but I find that unlikely because I think that the way that this is going to go is that JP Morgan, they're going to end up building a layer 2. They're going to end up building their own ecosystem of banking services, of apps and everything on top of that layer 2. They're going to profit from transactions there. They're going to profit from all the different apps that they create on that ecosystem. So I think that it's much more seamless if they keep it in-house, and just a lot more unlikely that they go the route of having this fragmented blockchain experience. And I'm not saying that, that XRP doesn't have any future whatsoever. I'm sure that they can find a niche market. I just don't think that it's the banks. I don't think that banks are actually going to be using it the way that a lot of people think. I think that they are sort of moving into creating their own stablecoin, and that's where their future is having their own stablecoin. But I think banks are ultimately just going to create their own. Now, the other thing that I wanted to take a look at here was inflation. So inflation came up slightly hotter than we expected in yesterday's report. And then the PPI data came out. That's a producer price index, came out a little bit hotter today. So overall, I don't think it's that big of a deal. If we come in here, we look at this trend, just like stocks, inflation, it goes up and down, but the trend is what's important. And if we just draw a real basic trend line here, you can see that we are still trending lower and lower. Yes, the last few months we've been trending higher, but overall we haven't broken the downtrend in inflation. And if we come over here, we can take a look at where is it? Here. So Brovers Research put out a really good chart showing that it's really the housing. So in the CPI report, the CPI shelter inflation, which accounts for 30% of it, that rent data, it actually lags by 9 months. And so we can see that here. We look at the Cleveland for new tenant rent. You can see how it is showing a rapid decline, whereas the CPI data, it's kind of lagging behind here. So we're expecting over the next couple of months that we'll see the CPI start to catch up. And because that accounts for shelter, housing, it accounts for such a large portion of the CPI data that we will see inflation begin to drop down quite a bit. And so last thing I want to take a look at here is, so Cointelegraph reported that Fed Governor Waller says banks and non-banks should be allowed to issue stablecoins, calling stablecoins as an important innovation in the crypto ecosystem with the potential to improve retail and cross-border payments. So again, this is just reiterating my theory that stablecoins are the big push that we are going to be seeing, and this is going to be really the mass adoption event because, like I said before, it's so easy if you suddenly have US dollars in a checking account and then they just convert that into stablecoins. Banks are making a whole lot more profit, and grandma, she just takes her card and just pays with stablecoins. It's the same thing. It's just it's now on a blockchain, much more secure, and the banks are making a lot more profit. So this really is the Trojan horse that we're going to see massive adoption, because once you have a stable coin, a stable currency that you can operate with, that means that your average person can use it very easily. And that means that, now they can interact with all of these other applications on the Ethereum blockchain and the DeFi space, because you're not going to get grandma to go in there with Ethereum or Bitcoin or whatever and start playing with it. They're going to be confused. I mean, I can barely get my grandmother to operate the TV remote. She gets confused on what button she's pushing. So, but they can take that phone or they can take that card and just tap it, and now you just paid with stablecoin. So it's going to be very seamless, very easy for once this is all integrated. So that pretty much wraps up today's video. If y'all have any questions, drop them in the comment section down below. I do enjoy kind of responding to y'all. But until next time, y'all take care.